Okay, in the next sequence of videos we're going to be looking at taxation and welfare reform. So we'll start at recent changes to taxation, and then in the last few videos we'll be looking at changes to welfare that have occurred over the last few years designed to boost aggregate supply and the economic goals. So basically when you're referring to taxation reforms, all we're really doing is talking about changes to the way the government collects revenue. So that might be changes in the form of changing income and company taxes, tax concessions for research and development, getting rid of negative gearing on housing. It can include a whole range of different policies related to taxes. And basically tax reforms include trying to reduce the tax burden on companies and individuals, so via lower income taxes or lower company taxes. It can be about reviewing the tax base, which means changing which things are taxed and which things are not to try and perhaps improve efficiency. So there might be improvements that can be made in the tax base as well to try and promote efficiency or promote equity and achieve the economic goals. So generally the aim of taxation reforms in Australia is to increase incentives for businesses to invest and produce, encourage individuals to work harder and boost Australia's international competitiveness. It includes policies to boost efficiency, productive capacity and our potential GDP. So basically the aim is they want companies to invest more, they want to encourage individuals to work harder, and they want to implement policies that are going to boost our international competitiveness. The government can manipulate taxes to impact aggregate supply. By changing the tax base, by lowering taxes, they can influence supply as well as demand. So tax incentives can be used to promote entrepreneurial behaviour. They can be used like tax concessions to promote innovation. They can encourage us to purchase capital like accelerated depreciation allowances. They can be used to boost productivity by lowering income taxes and effort. There's a whole range of changes that can be made to the ways that government collect tax, and they have a big impact on aggregate supply and the goals. Some of the reasons why our taxation system needs reforming, and this is a question from last year's exam, these are some problems that Australia's economy is facing that potentially require the government to implement these taxation reforms. So the first one is that there are problems associated with bracket creep. So at the moment with our marginal tax rates the way they are, people are getting pushed into higher tax brackets, and that's providing less incentive to work, potentially, and could hurt our growth in the long term. Another reason they need to reform the tax system is because of their pursuit of fiscal consolidation. So we need to increase the tax base to try and get us back to surplus. The revenue as a percentage of GDP has been falling, particularly since the GFC, so they need to find ways to collect more revenue. The ageing population is another reason why we need to reform the tax system. The government is not collecting as much money because people are leaving the workforce, and therefore there's more expenditure and less revenue for the government as well. Some big things though is the company tax rate is too high in Australia. So I said in this in class today, but the average around the world for the OECD countries is around 25%. The Asian countries in close proximity to Australia, it's around 21%. So even the recent changes in the company tax rates to 27.5% still show that they are higher than OECD averages and particularly our Asian neighbours, which is hurting foreign investment because overseas companies don't want to invest in countries if they have to pay a higher tax rate, because you might as well go and shift your operations where you're going to have to pay less tax so that you can keep most of your profits. There's too much red tape on businesses, which basically means there's too much paperwork and compliance costs associated with running your business in Australia, which is costly in terms of time, and therefore businesses would prefer to be spending their time on their core functions. So they want to replace inefficient taxes or less efficient taxes with more efficient taxes. So I'll be focusing on some of these first 5 reasons. Bracket creep, repairing the budget, our ageing population, the company tax rate's too high, and they want to remove red tape. So when we're implementing taxation reforms, these are some of the things that we're trying to achieve. So they may be implemented to try and boost efficiency. They may be focusing more on equity or fairness. So when we mean fairness, we might be talking about making sure that every industry faces a similar tax burden and we're not putting all the pressure on certain industries. Simplicity, so people know what taxes they need to pay and it's easy for them to pay their taxes. And transparency as well, so it's very open and everyone is aware of the tax different companies has to pay as well. Excise taxes, just in relation to excise taxes, I'm not going to talk about them a lot in this chapter, but they're not really used to promote technical efficiency or boost our productive capacity. The idea of excise taxes is more to achieve a more efficient allocation of resources. So by raising the relative price of things like alcohol and tobacco, the idea is to shift resources out of these demerit goods by increasing their price and shifting our resources to other things that are more desirable. But other taxes, things like tax concessions, direct taxes, these are the things we're going to focus more on this chapter, because these things are more related to trying boosting participation and boosting our long-term growth rates. Thank you.